Hello everybody, welcome to this video. Right now I'm looking at gold and how it played out during the past week and this week and during the previous weeks, as well as what I had anticipated that the market would do. So firstly, I've seen that the market was on an uptrend in this case, and the market was about to break down and actually come down and downtrend. So I was waiting for a buy position over there, and hence I sold here in this area, seeing that there was a break of strategy to the downside. So I was actually seeing that the market maybe might be able to create liquidity, and by doing that, then the market will go up and clear all that liquidity. And the market did exactly that. It created liquidity and went up to clear the liquidity. So it didn't reach exactly my point of interest, which is my order blocker right here in this case. But nevertheless, we managed to catch the sell, and actually we got out as soon as the market could actually go all the way up. So we saw that there was a consolidation here in this area, and this consolidation triggered a lot of things that were happening in the market. So we see that here in this case over here, we see that the market came down over here and the market went up. So the market was creating liquidity because it didn't take out this, what wasn't taking out these lows over here. And the market came and took out those lows right here and right here, and the market shot all the way up to that area over there. So now we're anticipating that the market actually could come down here, and now we have the market doing this in this week. So last week we have that high of the week and we have that low of the week. We have that high of the week over there, and we have that as the low of the week of the past week. So what happened is the market came to this demand area or this order block over here, and then the market shot down from there. But before the market could do that, when the market was here, I could anticipate that the market would actually go up in this case due to different reasons, and that the dollar index was actually going all the way down. So it had to go up. So the market had to go up, and also looking that the US is a bit struggling. It was struggling in terms of other stuff. So now the market is going down. So the general trend is a downtrend, while the market wants news that it came. I think it's CPI. CPI, that's the one that actually made the markets to go up. So hence the market had to go up, and then the market is now coming down. So I knew that I had to put a position over there. I knew that there were two areas in which the positions could be placed. So my first position was in that area over here. In this area, I took some profits over here before, and then from there I saw that news was coming up. I took a buy setup over here. I took a buy trade over here after taking out that liquidity of the day, and I took that buy position, and the market went up, triggering my sell position to actually bring it down to cover up all this imbalance here and all this fair value gap over here, and also it was covering up this fair value gap over here and also this fair value gap, so that it can bring down the market. And high chances the market might actually reach all the way there, coming to this low that the market could actually get and tap into and go out maybe somewhere there, maybe coming down to the low of the week. But I'm anticipating that the market would actually come to this demand area, then head all the way up. That's what I am thinking that the market could do. Because on a generally we're on an uptrend in terms of the higher time frame is concerned. Then maybe we take a look a bit on the EU and see what was the market anticipation. Okay, we have the EU right there. We have the EU. This is what we thought the market could do. This was the first preference that the market could do. The market could reach that order block, hit and go all the way up. The market did reach, take out the low, yesterday's low, and the market pushed up the following day on the London session. The New York session bringing it down so that it can consolidate on the Tokyo session. Then from there the market came down. The market started coming down, changing character over there, and coming to that order block, bring the market down, taking the low, then the high of the day, then going down, then going all the way to that area, and the market busy coming down. Then the market had to strike up, take out the high of the week, and now the market is on its way down, leaving liquidity up there. So we have the market coming either to this order block. Sorry, my network is a bit tricky, and so some of the data isn't loaded yet, but we can use this data. So the market, I think it to come to this order block or this order block and see how the market is reacting in those areas, whether we're gonna buy or we're gonna sell. So if the USD size, well, the one I was looking at again, So with the USDs, we have, sorry about that, let me just place that on the side. um this that as well on the side. Okay, let's just leave it with the hour. The USDs are going all the way up. We're seeing it here. There's a 5-minute time frame. Let me try to put on a bigger time frame, maybe the H1 time frame. So looking at this beautiful setup here that had happened here on gold. This was very lovely while the other ones are still loading. So EU is still loading, and USDs are still waiting for the network a bit to be a bit okay. Well, my network is a bit tricky on my end here, so but nevertheless, this is what I was trying to explain to you in these trades here. So most of these things repeat themselves, as you can see here in the USDs are a breakout structure to the upside. Then the market created liquidity over there, then came to this fair value gap area, and the market is shooting up according to this. So those are the patterns that I usually follow. And sometimes I take on the fair value gap, sometimes I take on the order block. Most of the time I like to take on the order block on the demand area, so that it can be a bit extreme and have a little bit of a stop loss, a small stop loss, so that I can not stay for very long in losses. I don't like staying long in losses. So yeah,